This is Money Exchange with Andrew Barnett.
Hello, I'm Andrew Barnett and welcome to Money Exchange, Australia's first and only dedicated currency program. The fuss about when the US Fed will lift its official interest rate is now a storm in a teacup. US interest rates will rise, and Janet Yellen made a good point on Thursday, saying it's not about the timing of when the US Fed will raise rates, it's about the path to raising rates. This is a clear indication that when the Fed does lift rates for the first time, it wants to continue to be able to lift them back to normal levels. Joining me shortly from London to discuss how global currencies are reacting to the Fed's latest decision is a man who spent 12 years as head of currency management at Credit Suisse. We'll also cross to Brisbane tonight to chat with an award-winning private currency trader who's recently thrown in the towel, sold the family business, is now a full-time professional trader. I think her story will inspire you. Plus, we'll review my big currency mover, and someone's going to win $1,000 cash with our weekly currency quiz question. Plus, we'll be answering your currency questions live on the show. You can email me directly right now via andrew@moneyexchangetv.com. But first, let's take a look at this week's headlines. Well, the US Federal Reserve has kept interest rates on hold at record lows as the central bank points to weakness in the global economy, low inflation and unstable financial markets. Fed Chair Janet Yellen says its key short-term rate will remain near zero, but flagged the possibility of a modest tightening later this year. The central bank says the US job market is solid, but recent global developments may restrain economic activity and further impact low inflation. The Fed now expects its preferred measure of inflation to rise only 0.4% in 2015, down from expectations of 0.7% in June. Meanwhile, the Reserve Bank Governor Glenn Stevens says he's confident the US Central Bank will raise interest rates in the near future. Speaking to a parliamentary committee in Canberra, Governor Stevens says that the United States economy is well and truly into recovery, and it's inevitable rates will have to come up.
They've been getting pretty reasonable growth. They had a pause early in the year, but returned to pretty solid growth, above trend growth even in the second quarter. They've been down at zero for 6 years, and at some point they're going to have to start coming up. That is, when that happens, without question, the most anticipated, fretted about change in interest rates in the history of the world, I would say. But it's coming at some point.
In terms of our own monetary policy, Governor Stevens said Australia's situation is very different from that of the Fed's, adding the Reserve Bank is comfortable where rates are for the time being. My first guest on the program tonight is joining us from London and is the former head of currency management at Credit Suisse and Investec, Thanos Papasavvas. Thanos, thanks so much for your time this morning and good evening here in Australia. The Fed, they left rates on hold overnight. In your view, when are we going to see them raise rates? And of course, in this part of the world, are we going to see the United States dollar remain upward pressure on emerging market currencies and the Aussie dollar and the Kiwi dollar? We're keen to hear your thoughts.
Of course. Thank you very much for having me on the show, Andrew. Appreciate it. I think that there was a little bit of a surprise in the markets that they did not raise rates yesterday. I believe that was the prudent, it was the correct decision to take, given the volatility in August of the financial markets, but also especially the significant correction in China. However, I personally believe that this is going to be a very temporary lull. I think that they will move in December. That has been my view for quite some time, that December 2015 will be the first move gradually by the Federal Reserve. By that time, the volatility in the financial markets would have subsided, giving a little bit of room for Janet Yellen to express a more US-focused monetary policy. Therefore, as a result, I think that we might see a little bit more of a correction lower in some of the currencies which have rallied most, such as the euro. So I think the euro will be weakening towards December from its current levels. The emerging markets, however, have had a significant correction so far, and I think they'll be pleasantly surprised that volatility has come down, maybe a little bit of some risk sentiment to help support them. And again, focusing a little bit more on the Aussie dollar, I think that Aussie dollar represents value in the high 60s. If we do correct from the current levels back to the high 60s, I think that would be a good buying opportunity.
Okay, what about the Bank of England? We saw that Mark Carney last week mentioned that the inflation in the UK perhaps may pick up towards the end of this year. We haven't seen a rate cut in the UK now, rate increase in the UK since the GFC. What's the probability of the Bank of England pulling the trigger before the US Fed, do you think?
I think that is a low probability. I think the Bank of England would probably wait for the Fed. They would not necessarily want to deviate by themselves, specifically because within the UK market, a lot of consumer sentiment, a lot of the purchasing power of individuals is based on that interest rate. All the mortgages, well, not all, the majority of the mortgages in the housing market are based off that base rate. So it will immediately impact consumer sentiment, unlike, for example, in Germany, where the mortgage rates tend to be in the longer end of the curve, the same with the US. So I think very low risk of the UK moving ahead of the Fed. I do believe that the UK will be moving sometime next year, probably in the second half of next year.
Okay, back over to Europe for a moment. We've got Greek elections this week on the 20th of the month, and of course next month, I think on the 4th, we've got elections in Portugal and then regional elections in Spain and Catalonia, I think. Are we likely to see, as I'm expecting anyway, euro weakness between now and the rest of the year? We saw Draghi come out a week or two ago and hint towards more money printing next year. What are your thoughts on the possibility of more money printing and a weakness in the euro back under parity against the US dollar next year?
I think that we will see a weakness in the euro from here to year end, from the 114. I don't think that will be driven so much by the Greek, the Portuguese situation or the Catalan situation. I think a lot of that uncertainty is in the market already. I think the markets will be focusing more on the more global macroeconomic and interest rate differences rather than the Greek, Portuguese or Catalan situations. However, in terms of your question, is it going to go below parity? I think that's a very tough question. I'm not sure if it will go sub-parity next year. It will very much depend on the speed of the interest rate increases from the Fed. And I'm not sure from now if the Fed will be able to increase by, let's say, 50 basis points quarter one, 50 basis points quarter two, and 50 basis points quarter three. I don't think that the US economy will be that strong. And as a result, it may be a more gradual approach, probably towards parity. I'm not sure yet if it will break parity next year.
And Thanos, very quickly, China, are we likely to see them intervene on their currency anytime soon again?
I think that the Chinese are more interested in the volatility rather than the level per se. I think they would rather have a more gradual approach. They wanted to manage expectations of investors, not to see significant weakness. However, if we do see a more sanguine level of volatility in the financial markets, including the Chinese stock market, I think the pressure on the renminbi will be less, and as a result, the policymakers will be a little bit more relieved. I do not think they want to use a lot of the firepower from the reserves to continue propping up their currency, in the same way that it was very expensive for the Swiss National Bank to continue holding on to the Swiss franc in January of this year.
Thanos, I really appreciate your time today. Thanks so much.
Thank you.
After the break, we'll cross to Brisbane to chat with a private currency trader whose story I'm certain will inspire any novice trader who dreams of trading full-time. We'll be back right after the break.